Hi, and welcome to this Fireside chat here at ABG Sundal Collier, where we have the pleasure of welcoming Ovzon and its CEO Per Norén. My name is Simon Granat. I work as an equity analyst at ABG, covering IT and technology companies, and I have the pleasure of covering Ovzon as well. But with that said, Per, can you initially give us a brief introduction to Ovzon, what services you offer, and also which areas in geographical terms you address as well?
We'd be happy to. So Ovzon is a company that was founded in 2006, at that time as a mobile satellite terminal company, so the equipment that connects to the satellite. So we are actually a satellite communications company at the core now. So we started with the terminal, and then we expanded through the years into an integrated service provider with advanced satellite communications, where we guarantee connectivity to our customers. Our customers are foremost found in the defense, so both civil and military defense, national security, and public safety markets. And geographically, we're foremost focused in Americas, but US, North America, EMEA, foremost in Europe, but also in the Middle East and somewhat in Africa right now.
Perfect. Thank you so much. And we know that for those that haven't followed recent steps, but there have been significant steps and significant milestones that you have achieved, particularly over the past 12 months, but also more than that. Can you walk us through some of the recent achievements that you as a company have made?
Absolutely. I think it's interesting with historical perspectives, actually. So first of all, the last 12 months have been very positively eventful for us. So in that regard, we have finalized the production and tests of our first proprietary built satellite called Ovzon 3. And that was launched on January 3rd this year in 2024. Then that's transported itself through an orbital racing to its orbital slot, where it's parked in what's called 59.7 East. It's at the Horn of Africa, where it's a geostationary satellite. It sits over that top, and it reaches basically Europe, Middle East, Africa, all the way to Korea, and all the way to Australia, and a bit out in the Atlantic Ocean with its steerability. So that's happened, and we went into commercial service on July 5th this year. And we now have had our 3 first customers on the satellite, where one have signed a big contract for the coming 12 months, utilizing one of the steerable beams on the satellite. So it's been very, very eventful for us and positively. But I was thinking about the question here as well in a historical perspective. That's just 9 months ago since we launched. But before that, in 2015, we launched the smallest mobile satellite terminal in the industry with the main customer, United States Department of Defense. And then since then, we've launched 2 more terminals on top of that. We've built the satellite. We've had 2.5 years of COVID. And here we are now at the scale-up phase of the company, utilizing all these assets to bring something very unique to the market.
Fantastic. Very intriguing stuff that you mentioned here. And I'd like to start off with some of the geographical presence that you have currently, because historically the US has been your largest market when it comes to sales and operation in general terms.
Yeah.
But you have recently broadened the scope to also increase the presence in the European market. Can you talk a little bit on what we should expect going forward when it comes to geographical mixes?
For sure. Now that, and it's been very clear that we were originally almost a one customer company, with the U.S. Department of Defense as our main customer, which was tremendous for us because they helped us with the requirements and what it took to be the leader in SATCOM as a service, as we call it. But also that's a sensitivity if you only have one customer, and you're very dependent on that they continue to renew contracts with you and expand with you. So we took a deliberate step in really focusing on what I said before, the defense markets, national security, and public safety markets. And Europe became an epicenter for that because of tragic accidents, really, with the Russian invasion of Ukraine. And then the geopolitical tension we have in the Gaza area with Israel and Palestine and Hamas and so on, and also actually in the Southeast Asia Sea, where we have some geopolitical tension as well. So for us, it was natural to say we got to turn our focus onto Europe. We got to have a strategy where we go to market and how we serve the countries in Europe, EU, and NATO as alliances, but also sub-alliances in there, such as if you think about the Baltic Sea, it's a very, very strategic area for NATO. It's a strategic area for the countries that just entered NATO, Finland and Sweden. And it's a very strategic area for the Baltic states, and then Poland and Germany and Denmark. So we also build kind of strategic business opportunities in those areas as well, not only through the formal alliances and so on. So we've had a very orchestrated effort around Europe, frankly.
Very interesting. And I also know that you have, as a strategic priority, to increase the durability of your service, i.e. going for longer contracts, because in some cases you have been for a shorter period, often there have been 8 up to 12 months. Why is it important to drive the durability for longer term contracts, and how would you say that it's developing so far?
I think that's a very good question, and it's one of the core questions in our current phase now when we have the satellite in orbit and it's in commercial use. It's how do we create sustainable, predictable revenue and growth from the assets that we actually can control ourselves. And I think the markets we're in, meaning the industrial market segments, are very much yearly budget cycles. They get renewed budgets every 12 months. So if you get into such a market and customer, you can get a 12-month contract. Our target, though, is there are also some frame contracts, and they are between 3 and 5 years normally. Those are our target to get into. That takes its time because you got to be approved by government approvals, procurement processes. That's not done overnight. But I think the company has done a tremendous journey in going from when I joined 3.5 years ago, 1 to 3 month contract with 12-month contracts being the anomaly, to now being 12 months is the norm, and we're targeting 3 to 5 years. So we're on a journey towards that. But I also see it as 12-month contract that we renew year over year, which we have started to do now, is also a more of a serial, longer-term contract if you deliver good value to the customer.
And as a follow-up question to that, would you say that it helps you to have your own proprietary satellites when it comes to these contracts?
It definitely does, because we can also then write certain things into the contracts that we can guarantee. When we bought satellite capacity from others, we also had to rely upon a third party to do that. So now when we have that, we can also guarantee certain things that we are responsible for. So that would be very, very helpful for us going forward, for sure.
And let's dig in a little bit more to the Ovzon 3, because you sell capacity here.
Yep.
And as you mentioned earlier, you have signed your first couple of customers. I think you mentioned 3.
Yep.
How should we view the number of tenants over time, and how do you work in order to utilize this capacity, both when it comes to utilizing it in general terms, but also from a performance perspective, but also when it comes to price, because you need to earn the money here.
Yeah. No, it's both an operational optimization of the capabilities and capacity we have, but it's also an economic optimization of that. So let's divide it into maybe a few things. The satellite has 6 beams, 1 gateway beam and 5 steerable antennas. So ideally, you would have 1 customer per beam. So up to 6 customers that signs long-term contracts. That's the nirvana of our model. Then we would boost revenue, we would lay on the same cost base, and it would drive profitability and gross margin and positive operating cash flow, right? Now, reality is that not everyone have the means, or maybe even they want to try things out first. So the step before that would be that you share this with within an alliance or between countries or so on and so forth. So you could say that that would mean that maybe we would have 12 to 15 customers on the satellite. The negative with that is that if you own a steerable beam yourself as a customer, you control the steerability and which region, which area do you want coverage, do you want a more narrow energy so you get more bandwidth through, etc., etc. So, but we have business models for that, and we even have business models for if you want to share like the gateway beam, you could be several customers that are just roaming kind of on that beam. So we have business models and services packages for all of those to ensure that we are not locking ourselves into just a one-trick pony, so to speak. So I think we've been very good in the period of time where we've built the satellite to also work on our business development and business modeling of all of this. So this will help us get on there. Now, the tricky part for us have been that governments are normally not allowed to buy something that is not a physical product or a service. So it means from July 5th this year, they could actually sign up for it. And most of them wants to try before they sign up for something that is fairly expensive. So we're a very intense period of scaling up and being out doing demonstrations and offering the solutions that are tailored to meet the specific customers' needs. And lastly, on the price points, very interesting. So we're in the value price business. We don't sell satellite capacity or services as bulk. We are a value provider. We guarantee 24/7 customer support and service proactively. We guarantee connectivity. And so we look for customers and they look for us that really meets that need of high performance, high mobility, and high resiliency. And by doing that, we get price points that are probably, I would say at least twice, but maybe 3 to 4 times higher than a normal provider at sort. And maybe mention also, because everyone asked about Starlink. So Starlink is a consumer product. It's for mass market as well. And they do that really, really well. Very impressive how they've actually been able to achieve that. But they don't guarantee connectivity. They don't guarantee performance. They are best effort. So if a satellite of theirs is in the area where you have your terminal, you get good bandwidth. If it's not there, you don't get anything. So we are actually complements to that. So we see ourselves as the kind of the tip of the iceberg value, and they are below the surface of the iceberg for the mass to utilize that. So that, I think, helps us to also drive prices a little bit up.
And I think that is also a good segue to my next question when it comes to margins and operational leverage, because as you point out here, you offer a premium service with high resilience and a high robustness, and the costs for building the satellites, those things are behind you, and you don't have that much variable cost when it comes to utilizing this capacity because it's your own capacity. So the high gross margins, they suggest that you should see relatively high operational leverage as sales improve. How do you view the other costs going into 2025, 2026 when it comes on scaling up the organization, or is that behind us? How should we view that?
Yeah, it's a very good question. Every company that is in a growth mode, which we are, and trying to optimize the assets you have, you need some capital for that. But in essence, we've been really good in keeping our operating costs. We've been very prudent with managing it, keeping it down. And as you said, there's not much of the investments that we've made the last 5 years into our technology, the Ovzon 3 and the Ovzon onboard processor and the Ovzon T7 terminal. It's not much more to costs for us to capture. So it should really be as we bring customers online and can get our premium price levels for our premium value, you should see a very robust increase in profitability, gross margin, as you mentioned, and also then turning into positive cash flow. I think the biggest cost for us actually, I know the biggest cost for us is actually the financing cost of all of this that we've invested over $200 million, right? So the financing cost is the highest cost. So we need to produce good financial results to be able to repay that, and then that should then create another level of performance for the company when we've kind of sorted that out as well. So it's a very interesting phase we're in, honestly. It's more profitable growth driven, utilizing the assets we have, and win market share, basically.
Fantastic. So I think we'll end the session right there.
Thank you.
Fantastic stuff, Per.
Yeah.
Thank you for being here today.
Yeah, and thank you for having me.
And
you know how passionate I am about the company and what we do and the technology and our people and our customers, so and our shareholders. It's fantastic.
Very much so.
Yeah.
Thank you for coming. And with that said, we'll end this session. Thank you.
Thank you, Simon.